I rise to move leave to introduce the Finance Bill 2016.
We've just heard this budget. I would say overall, it's a good budget. Some might say too incremental. What are the things I liked about it? They stuck to the fiscal deficit targets, 3.9, 3.5, big boost in terms of confidence of this is a government that means business. What else did they do? There was the issue of whether capital gains will be increased from 1 to 3. They did not do it. Good. Cleaning up of, a lot of the business of tax administration, reducing the hassles, reducing the disputes, all of that, very good. A commitment to no retrospective taxation, I hope it sticks. But to that extent, yes, good. What do I think was wrong? Black money amnesty, bad, shouldn't have been done. What do I think was wrong? The corporate tax. In my mind, if you're going to get down to 25, this, just for a couple of very minor areas to reduce to 29 was too slow. Something that particular phasing should have been a little more aggressive. What else was completely wrong? I would say if you keep increasing the taxes on cigarettes and then say, but not on BDs. What on earth are you trying to do? If this causes cancer, are you trying to say we are going to save all the rich people from cancer, but the poor people must be allowed to have cancer because we believe that, getting cancer cheaply is a benefit for the public? And I would say above all, why the devil don't you legalize and put a tax on betting on cricket? There's an Asia Cup coming out. You missed a golden chance.
Sure. The market reaction not very good though. Mukesh Butani, quick word on LTCG. Has he not tweaked that? Because that's still a little confusing.
The fine print, but the fact that he brought up the 36 months down to 24 months insofar as unlisted suggests that the listed ones have gone up from 12 to 24. I just wanted to make two observations on Swami. Number one, the reduction in corporate tax rate to 29% is restrictive. It applies only to companies with turnover below 5 crores. Secondly, also insofar as VDIS is concerned, I don't think there's VDIS. Last year, he introduced the Benami Transactions Law for undisclosed assets lying in India. That was not implemented. Right. Now that is being implemented, so it's not VDIS on income, but it's on assets.
So I want to throw it to the market panel, get a quick word in from Madhu Kela, because market reaction not very good as things stand. We're seeing a bit of a sell-off both on the Nifty and the Sensex. Madhu Kela, how are you reading the budget?
I think from a capital market standpoint of view, even though we have to see the fine print, I hope they have not increased the listed space from 12 months to 24 months. At least that is not clearly spelled by the finance minister. The other thing market was not expecting was the tripling of the STT on the option front, and also negative is the dividend distribution tax being paid by the people who are more than 10 lakh rupees of dividend. So from an overall market perspective, this is marginally negative. However, I would say overall budget, let's not look at today's fall and judge the market. Overall budget is very constructive. They have adhered to the fiscal path of 3.5%, which is very credible. There is a lot of emphasis on minor items. There is huge outlay on the rural side, increased by 21%. Huge emphasis on the infrastructure side. So I would say today's market reaction should not be attributed as a really bad budget. Having said that, there are incremental few negatives from a capital market standpoint of view.
So, Madhu, what are those negatives? What explains the panic in the market? Long term, there is lack of clarity, but fiscal deficit target, no tinkering there. So at least one evil is out. What explains the underlying panic? Markets are at a fresh low.
Yeah. As I said, the dividend distribution, the STT on options, the dividend distribution tax, and clearly, the corporate tax reduction, as Swami was saying, was thought that they will at least go from 30 to 29% for all the corporate tax, since they are cutting down on deductions and incentives. And that has not happened.
Rashish, with the 3.5% deficit target, he's managed to stabilize the bond markets at least right now. But clearly, equity markets are not happy.
Yeah, it was always a trade-off. If he kept the bond market happy, the equity market will be unhappy, because they wanted to see a lot more investments, a lot more spending by the government, and it's not happening. So I think overall, I would say it is fairly good for the economy. Maybe a few things the market is concerned about, but I've always believed that FIIs are selling because of global issues, because of their own over allocation to India, and it's going to go on for the next few months. So I think overall we should not see the market as a reflection of what has come out.
I'm going to get a reaction again from Madhu Kela on the bank recapitalization number. Madhu, were you expecting a big number? The number is not a fat number. Do you think in the short term PSU banks will underperform more? Quick 30 seconds, Madhu.
I think the expectation was at least 35,000 crores. They have provided 25,000 crores. However, the finance minister has said that if need based, they will provide more.
Nilesha, PSU banks.
Yeah, I think there's a bit of a disappointment on the PSU bank front because 25,000 crores is something which is slightly below what the markets expected. But I think the big takeaway is fiscal consolidation, sticking to that path of fiscal consolidation, 3.5% fiscal deficit. I think that's very positive for bond markets. That's very positive for banks as in general.
But huge amount of volatility, as the case would have been. 69.35 is where the Nifty is currently, and mind you, this is a bit of a bounce that we've seen from the lows of the day. But Sandeep, equity markets, the verdict is out there on the ticker.
Yeah, equity verdict out there in the ticker. We need to understand the fine print as well, Aisha. We've got the biggest panel here to help us analyze that as well. In minutes from now, we'll be joined live by Uday Kotak, Deepak Parekh, and the man behind the budget, Chief Economic Advisor Arvind Subramaniam, is going to be live and exclusive on ET now in just a few minutes from now. But I want to throw it to our panel here. Sanjay Nair, how are you reading the budget from a market point of view? Things not looking good. We're seeing some amount of selling happen along expected lines because the tax proposals have come as a bit of a surprise to the market.
Yeah, look, again, I mean, as I said to you earlier, I don't think the markets really matter immediately. I think, actually, I was quite impressed on balance. I mean, there was a clear focus on what they believe, which is rural, social infra. I mean, there was no doubt about it. Don't know the fine print of how they're going to raise all the money, but clearly looks like they're taxing the rich, taxing the luxury, which is something not wrong. And I think STT going up by 3 times is obviously a big deal. But look, I think at least they have laid out very clearly what they believe in, and I think that's what matters. The rest is upon them to really execute. And I think it should help with agriculture productivity, should help with demand. So hopefully we see some revival of rural demand there. Let's see.
Fair point there. I mean, in fact, the fine print is beginning to emerge. Divestment target at a little more realistic levels than last year, 36,000 crore rupees. And strategic sale proceeds are likely to be at 20,500 crore rupees. Government finally getting to terms with the fact that divestment cannot be 69,000, and which is why it has been reduced. Is that a more realistic opinion according to you? And a strategic sale number also being put there finally.
I don't know how you would differentiate between a strategic sale being easier and divestment being difficult. I'm not very clear or sanguine on that part. But obviously the experience has been that these large numbers like 69,000 and 70,000 crores are not being met year after year. So to that extent it is more realistic to see a number which is closer to something that can be attained.
Maitri, very quickly then, PSU bank recapitalization. I mean, they were expecting 35,000 crore rupees, only 25,000 crore has been given. Not enough, really.
It doesn't make a difference either way. It's very nominal, I would say. In fact, he started off by saying it's a transformative budget. I don't see anything transformative at all, except that he's abided by the fiscal deficit target. And for all the hot air discussion that we had, markets clearly don't appreciate him very much for having walked the straight and narrow.
I think markets are a little nervous with what they have done with the securities transaction options tax, and of course, I
think he's lost the ball back to the RBI, because he said, now stuck to my fiscal deficit target, ball back in your court. Now do what you want.
Nikunj, Asha, you guys want to come in and throw it back to our market panel while we get Deepak Parekh mic in just moments from now. You want to get a quick reaction from Nilesha and Shankar Sharma as well.
Sandeep, I just want to mark one point that markets are no longer languishing the way they were languishing half an hour ago. So there is a mild recovery which has kicked in. Madhu Kela, the event risk is behind us. We wait for the fine print, but will you be a buyer in this market, considering the markets in the run-up to the budget have been nervous? Will you be a buyer now, Madhu Kela?
I think we have to buy gradually, because as said, there is nothing really negative in the markets. As Rasesh was saying here, let's not look for budget to be an excuse. The problem with the market is selling by FIIs. We have to see, once that abates, then market will take more constructive note of the positives which are being delivered in the market. So the verdict is today, if the moment I see the reversal of FII flow, I think markets will turn positive.
So don't go by my tie color, go by Madhu's tie color. It's green.
I'll keep it neutral to my jacket, white, peaceful. But Shankar Sharma, it doesn't seem like it's going to be peaceful, right? Because like Madhu is saying, and like the point that you were reiterating earlier as well, it all boils down to the global growth slowdown. And India is going to fall prey to all the FII selling that we've been witnessed across the globe.
I don't think that's a very accurate assessment. My view is that, yes, there is a big global macro problem. I mean, that we all know. It's been there from 2008. But India has been an outlier in a good sense for a long time. I mean, almost 7 years post that, India has been an outlier in a lot of senses based on pure fundamentals, in a lot of senses based on hype and expectations. Now, in the last year and a half, the hype is dying, and it's now being replaced by the cold reality that there is no magic wand this government has, despite all the expectations that, fund managers and analysts had. It is just back to a normal, run-of-the-mill kind of government, the way we saw in UPA 2. So nothing very markedly different. So in that sense, does India still deserve that premium over the others? That's the real question. Inflation is down so much that nominal GDP is now only 5%. In that situation, can you expect 17-18% earnings growth? I don't think that's going to happen. So in light of that, it is really that high premium that India was enjoying that is coming off. So yes, the global situation is troubled, but India has been more troubled in the last 1 month because the hype has been now ebbing away. And that, I think, is a real problem which we must, contend with.
Sure. Let's get a quick word from Deepak Parekh as well, Chairman HDFC, joining us right here on ET. Now, Mr. Parekh, let's talk about the big picture. There was some concern on fiscal deficit target and whether the government will relax the target. On one hand, it's sticking to the target of 3.5% for next fiscal, but on the other hand, it's also constituting a panel to review the FRBM Act in itself. So, has the government tried to please both camps by doing this? What's your assessment of what they've done on the fisc?
I don't think he has erred, because he kept insisting, and I entirely agree, that financial prudence is absolutely necessary. You cannot spend more than what you earn, and you have to be within limits. Finance Minister also stressed the point that he has not compromised on any projects, or he has not compromised on any development plans of the government. But he stuck to the 3.5% deficit which he had committed last year for the current year. So I think he's done the right thing, and rather than spending a lot of money on development projects and suffering a year later or 2 years later with excessive debt and excessive leverage.
All right, so he keeps his date and he stays within the Lakshman Rekha as far as the fiscal deficit is concerned, Mr. Parekh, but we've seen heavy emphasis on boosting rural economy, enough to perhaps rescue what is acute distress in the rural economy, according to you?
I think the thrust of the Finance Minister's budget this year has been rural, agriculture and social sectors. And he has emphasized these three sectors at length. And what this does to the economy is it brings more money to the farming community, where almost 70% of the people are residing, and it gives more power to the farmers. It educates people more, because job creation, social sector, health, education, the three sectors that he has emphasized significantly and taken a large part of his budget speech have been farmer welfare, rural sector and job creation and skill development, which includes health, education and all the relevant things. I think the emphasis has been right.
Right. One man who's, of course, going to be happy that the government has not breached the Lakshman Rekha on fiscal deficit is Jahangir Aziz, joining us live from Singapore, Chief Economist JP Morgan. Jahangir, always good having you on the show. Your sense of the budget in totality, do you think in balance, does it seem like a more balanced budget? Are the numbers adding up, or are you concerned by the fact that he's taken a lot of tough measures as far as taxes are concerned, which we'll come to in a bit, but your call on the fisc and on the budget on balance?
Right. So no, we'll go through the details. I still haven't seen the details, and always the devil is always in the details. But on the face of it, I think that sticking to 3.5 was an extremely important signal. We can talk about the fact that maybe the details will not match 3.5. Again, we'll get to that when we get to that. But to start it off with saying that it's going to be 3.7 or 3.8, which was a big rumor going into the budget even a few hours ago. I think the finance minister has done the right thing, sticking to the 3.5. And, you know, I'm sure he was under tremendous pressure. I mean, there was pressure from the market, and I'm sure there was also pressure from inside the government to breach it on the pretext that, you know, global growth is slowing down, et cetera, et cetera, et cetera. But I'm really happy that the fact that he has actually stuck to 3.5. I think what the 3.5 does bring about, and this is where I'm surprised by the reaction in the equity market. You know, the bond market has actually rallied quite a bit. I mean, till about 2 minutes back when I was coming down from my office, it was almost like 8 basis points. And I'm surprised by the equity market. And I'm surprised by the equity market because a 3.5% fiscal deficit target, I think, will be pushing RBI to cut rates as early as probably this week itself, at least 25 basis points. And market doesn't seem to be taking that into account.
Jahangir, I'm just going to interrupt you because we're also joined by another special guest, Uday Kotak. In minutes from now, we'll hopefully have Arvind Subramaniam, Chief Economic Advisor, as well, joining us live and exclusive on ET Now. Uday Kotak, thanks for joining us. I know you'd be happy with the fact that the government is stuck to its fiscal targets, but what explains the market reaction? Do you think there's some amount of anxiousness on account of still the lack of clarity on long-term capital gains? What has he exactly done? And on the increase in STT, what explains the market nervousness?
No, I think, first of all, you've got to look at the market situation in the context of the global situation today. You have had a sharp drop in China and other markets, which are reflecting in the Indian equity markets. But I'm very, very enthused by the discipline which the finance minister has shown on 3.5% discipline. That is, will reflect into equity markets sooner rather than later. I expect the RBI also to be responsive to the fact that the government has stuck to its discipline. And when I look at the budget, I see a significant amount of a purpose and a direction in this budget. The challenges will be about how well we execute down that purpose. And frankly, when you maintain a 3.5% discipline on the fisc, you come with some of these taxes, whether it's dividend distribution and others. Therefore, individuals may not like those taxes, but that's the price we Indians should be ready to pay for getting India's fiscal house in order.
A fair point. And Mr. Kotak, Madhu Kela of Reliance Capital also has a question for you. Madhu, please go ahead.
Uday, what is your take on bank recapitalization? They have provided 25,000 crore rupees. Do you think that is enough to recapitalize the public sector banks? If not so, how much more do you think you will have to provide during the year?
No, I mean, I would have liked to see a little more there, but I would also believe that that there would have been discussions between RBI and the government, and they would have some sense on how this recapitalization in totality can happen. I believe it is also possible for definition of capital under Basel III, which can be looked at in terms of more room available for definition of capital on bank balance sheets. Yes, more than 25,000 crores would have been good, but at this stage, 3.5% discipline was a trade-off, and I frankly feel that it's extremely important that 3.5% was maintained.
Mr. Kotak, but the counter question to that is, and thank you very much for joining us, this is Supriya Srinath from the New Delhi studios. The counter question to that is you maintain 3.5%, but you're also talking about reviewing the FRBM Act. Is there a bit of a double standard that's happening there, and what should markets make of this?
Supriya, first of all, I would like to say that for 16-17, he's sticking to one number, which is 3.5%. Yes, for the future, when he's got to come down to 3%, he may give a range, which is 3.2, but we are down the glide path to a superior fiscal situation, and that is a big positive. And keep in mind that at the same time, from what I have heard on the budget speech, he seems to be dramatically increasing spend for roads, social sector, and a lot of good things which India needed to do. And I would say that that allocation is a positive as long as we can get execution right on that. Therefore, in this balance between fiscal consolidation, making sure that India starts spending more on important things and getting the house in order, there are some trade-offs which have been used, but I think I would live with that.
Okay. Rashesh Shah, markets are stable. We've recovered from the day's low. Event risk is over. We are discussing the fine print, but the market volatility today is extraordinary.
Yeah, I think it just shows that, the Indian equity markets are fairly resilient because of Indian buying. Because I think what we saw earlier was more, the global market cues and all. And overall, if you see, a lot of things are good for the economy. A lot of things. When I was trying to put down the good things in the budget and the things which we are not happy about, there's a long list of the positives and a very small list of the cons in that sense. So overall, I think the 3.5%, the government agreeing to go below or exploring going below 50% in some of the government-owned banks, the HRA deduction, the REIT, DDD exemption, a lot of the good things are there for the economy and for investors in the long term. But in the short term, I think there was a market reaction, which I'm very happy to see that markets have come back to stable footing again. And I think as the days go by, we'll see that this is a more balanced kind of an approach rather than just try to keep the equity markets happy.
Uday, given the fact that the government is for now sticking to its fiscal roadmap, do you expect the central bank to act quickly? Do you think, can we expect an out-of-turn cut? Could they move earlier than expected? Do you see that coming at all?
I would hope to see a March cut if the central bank responds to the fact that the government has shown discipline. And let's see what happens. But I would say that this is something which is being reflected in bond markets. And finally, bond yields have an implication on cost of money, which has an implication on all asset prices. Therefore, bond yields in the last 2 weeks were going haywire because of worries of fiscal deficit, both center and states, and bringing this back to a narrower path is extremely important for bonds, equities, all asset classes.
Uday, I'd urge you to stay with us for just a few more minutes. I know Madhu Khila has a questions for you, but I have a few questions for my panel here as well. Mukesh Butani, very quickly on the Vodafone issue. While the government has been saying repeatedly that no retrospective tax, one seems to get an indication that now it's an open and shut case. They've said that you can close these cases as long as the company is willing to pay the principal amount. Is it now a done deal?
So what he's done is that he's tried to bring various things together. You had a retrospective law. You had recommendations of the retrospective committee, and then you had verbal assurances that were given that this government doesn't believe in retrospective laws. He's now said that you can come forward and settle. If you're willing to take away all, take away the VIPA cases and tax disputes if they're lying in various courts, you can come pay the taxes. You will be given an exemption insofar as interest and penalty proceedings are concerned, and that's how you want to settle it. So basically saying, I want to put a full stop to this whole controversy.
But let me remind the viewers that this discussion went on even earlier. Even in 2013, this discussion was on that if you pay the principal, we don't pay the penalty and interest. But the question that Vodafone was raising is that it's a matter of principle that we don't believe we are, we required to pay the tax.
Vodafone wasn't willing to do it then.
So I don't think this is going to be as simple a matter. But the other point we must remember also is that if retrospective taxation is on the statute, if you don't remove it from the statute, then no amount of administrative measures, whether you raise the committee level to the revenue secretary or cabinet secretary or anybody else, there is no way that you can prevent an income tax officer who is legally charged to implement the law from starting a new case.
So the solution was to axe the retro tax, which hasn't been done.
So the idea is that at some point this year we had thought, at least I was thinking that they may remove it. But unless that is done, the sword will keep hanging.
In minutes from now, we'll be joined by Arvind Subramaniam, Chief Economic Advisor. That will be an ET Now network exclusive. Sanjay Nair, you think you're disappointed that on the consumption side he hasn't done much? In fact, some of his moves could be counterproductive, like increasing, the cess on diesel vehicles, on petrol cars.
There's an agri cess coming.
Actually, I think there could be some positive effect of some of the stuff he's done in the middle class and in the rural side. So I don't think you should assume that there won't be a kind of a trickle-down effect on consumption, demand, and in fact savings. So if you go through whatever he said and whatever I've heard, the kind of focus effort they've put on rural and then ease of doing business, ease of compliance, and presumptive tax on small businesses, SMEs and, small retail, it could lead to actually trickle-down effect on better consumption, maybe even more savings. It's not evident, but I think it could. So we should just take it easy before we conclude. He hasn't given a specific tax boost, which, could be coming indirectly into a lot of these things.
Sure. We've got Prashant Jain as well, India's largest fund manager who manages HDFC Mutual Fund, joining us live on ET Now. Prashant, quick question to you first. How are you reading the budget? A bit of volatility in the market. We saw a knee-jerk cut, and then now we've seen some of those recovery, a bit of a recovery in our markets. How are you reading the budget and balance?
No, I think it's a very good budget, and I don't think we should judge the budget by the knee-jerk reactions of the market. I think the fiscal deficit target is, I think, very good. Fiscal prudence has been maintained. It should lead to lower interest rates, the impact of which is very important. I think to maintain the fiscal deficit, to reduce it, the taxation is increasing from higher income groups and from some luxury products, which I think is good. A lot of expenditure is earmarked for social infrastructure for the low income households, which again is extremely good. And I think the thrust on DBT continues, like fertilizers on a pilot basis are being moved to DBT, and this I think is a very important program. Like LPG has been moved, kerosene should be moved, fertilizers, if they are moved, over time this can lead to a serious reduction and to a rationalization of subsidies. So net I think I am quite happy with the budget.
The area, one of your key investment areas is the entire PSU banking space. The recapitalization number is not that impressive. In fact, it is below market estimates. So for a money manager who thinks long term, the fact that the health of the PSU banks will be in a disarray, NPAs may not be sorted out in the short term, is that a negative?
I think this whole issue has not, to my mind, been properly understood by the markets, and I really don't know what market expectations were. But let me give you a quick synopsis of this whole issue. The RBI estimates, as per their paper, originally was a capital need of 1.8 lakh crores. Finance Ministry had done a study, and they had done a call with investors also about 6-9 months back, wherein, the original number was 2.4 lakh crores. And this was reduced to after the study, the capital needs was reassessed at 1.8 lakh crores, of which the Finance Ministry had indicated they will give 70,000 crores. 25,000 crores was given last year, 25,000 crores is being given this year, and 10,000 crores should come in the next 2 years. I also think there are a few other avenues available to us. The Basel III norm of core tier 1 in India is 8%, whereas internationally it is 7%. So that gives you some headroom. Real estate, again, as I think there were some comments over the last few weeks, can be made eligible for tier 1, which again I think is an avenue. And in any case, the finance minister has said that should more be needed, more will be provided. And one final point is, I think, that one of the large PSU banks has said they don't need to raise more capital. So I think if you look at the...
It's a transformative budget. It's a budget for change. It has given balanced emphasis on agriculture, the rural sector, on irrigation, on infrastructure. It has also given focus on major areas of reform. The introduction of the Aadhaar bill, the reforms in the passenger transport segment, which will really open up that sector. And there are many more measures. So seen together, I think it's a budget for change, and it will definitely usher in higher levels of growth.
So you've chosen to stick to the fiscal deficit.
Fiscal deficit this year we have stuck to 3.9 this year, which was there in the budget.
Voice from government, and Nilesh, I'm going to get another 15-20 second reaction from you. Why are markets recovering? Because what we discussed 20 minutes ago, Nilesh, was a lot of pain, no gain, and markets have recovered.
Yeah, that's, I think, clearly because the market is right now focusing on the fiscal consolidation path, number one. There's a continued thrust on infrastructure sectors like road and power. I think third, of course, is this huge focus on Aadhaar. And the fact that now a legalized Aadhaar could help you to roll out DBT in a more significant and widespread manner. So I think it's a combination of all of these factors which is really kind of ensuring that the market kind of, recovers. Clearly, I think India's big point was its macros. And I think this budget reinforces the strong macros which India is displaying in the rest of the world. So to that extent, I think from that point of view, it's a huge positive for the markets also.
Yeah. Don't please judge the market by the knee-jerk reaction in the first 10 minutes. That
Absolutely.
So what was the right
And the recovery has been
one?
remarkable. I'm going to just quickly get Jahangir Aziz. He's also on the line with us. And Jahangir, now that the fixed deficit target is maintained at 3.5%, do you think this makes the case stronger for a rate cut by the RBI next time?
I was saying, in the previous time when we were talking about this thing, I'm expecting a rate cut as early as this week, maybe within the next 48 hours of around 25 basis points, and promise for some more if inflation behaves and if monsoon behaves. But 3.5, even if there are devil in the details, I think at 3.5, the fact that the government kept to the budget consolidation path, I think paves the way for a rate cut this week itself.
That's the headline that he might just cut the rates this very week itself. Madhu Kela, that should please the markets, an interest rate cut.
Yeah, in fact, this is the best part of now the road ahead. Because whatever the government promised, they have delivered. Now it is RBI's turn to deliver.
So what becomes a clear gainer for you now?
It is all the way, things which are linked to interest rate sensitive, which are banks.
So buy interest rate sensitive.
Yeah, absolutely.
Sandeep, the headline from Madhu Kela is buy rate sensitives.
Oh yes, banks are clearly going to be in spotlight, and all action now shifts to the central bank. We've got Mr. R.C. Bhargav, Chairman of Maruti Suzuki, one of the tallest leaders of corporate India, joining us live in our studio here in Delhi. Mr. Bhargav, first your reaction to the budget. Bit of a disappointment as far as the auto sector is concerned, because, just what we didn't need when we were trying to kickstart demand in the auto sector, additional cess on diesel of 2.5%, even on small cars as well. Does that come as a disappointment?
Yes, I think this was unexpected. And because it is supposed to be linked to pollution, I think there's a very poor understanding of what pollution problems in Delhi are and what causes them. Because the particulate emissions in Delhi are the main problem, the PM 2.5 and the PM 10. Sure. There's an IIT Kanpur study which has just come out a little while back, which I'm not sure how many people have seen, which says cars constitute only 2% of the particulate load in the air in Delhi. Now, if 2% is the load, why are cars being targeted? Especially when you're also saying that we must spend all the money required to get to Euro 6 by 2020.
Sure.
It's a little hard to follow.
Mr. Butani, I wanted to ask you, that he's talked about, there are so many tweaks that he has made in the taxes, but ultimately if you look at it, your direct tax revenue is going to come down and your indirect tax revenue is going to go up by 20,000 crores. So contrary to what any developed country would aim to go to, where your direct taxes are progressive and you need to have a right mix between direct and indirect. We seem to be going progressive. We want to have more indirect tax and direct tax. Doesn't this go completely against the grain of tax reform?
Well, India has always looked at the tax GDP ratio as combined direct and indirect tax. But yes, I largely take your point. In the western part of the world, you really tax the rich more. But the fact is that he's given away a lot in the direct tax, and that's the reason his net collection is just a little above 1,000 crores. But I think now you have a three-tier corporate tax structure. You have the 30% tax rate, you have the 29%, and then you have for manufacturing an option given at 25%. So but there are several interesting aspects in the budget which I think will help him improve the tax compliance. For example, now the penalty rates are reasonable, 50% and 200%. There are several exemptions that he's given away, the pass-through exemptions for asset reconstruction companies, the pass-through exemptions which were not available for the real estate funds. And more importantly, his phased-out exemption program, which in the Department of Revenue draft was not looking very good, is looking far more reasonable. For example, he's taken away the date of special economic zones from April 17 to April 20. So there are several good elements, and then on litigation I think he's done a lot. And I think overall several changes in the direct. I just wanted to make one more mention on the indirect tax side. He addressed the inverted duty structure for mobiles last year. This year he's added IT, hardware, textiles, chemicals, petrochemicals, and there are several benefits given to the MRO the ship repairs, and the housing projects.
Right. So there is a lot on the fine print.
These are material changes, and we need to see the notifications.
Sure. We will await the notification. But Sanjay Nair, on corporate tax, are you disappointed that we haven't seen a more sharper cut in corporate tax rate? Surely corporate India would have liked to see a little bit more on that front, or do you think this more granular way is better?
I think it's a trade-off between exemptions and that, right? So as you were discussing earlier, you can't have it both ways. I think one would have hoped you had a more speedy glide path downwards, but then there's, I'm sure, been enough lobbying from various sectors not to cut either the R&D side or the depreciation side, and I think therefore they've tried to keep as constant as possible. So frankly, there hasn't been much of a significant move on that.
Right. I want to throw this to Swami, Maitri and Dr. Mayaram as well, which is on the rural push. Swami, the sense that one got is, at least as far as messaging is concerned, the government wanted this budget to be seen as a budget for rural India. There's a concerted rural push. Do you think that's a bit of a political recalibration of this government, so to say?
No. Every single budget wants to push the rural area. I mean, this is a country which is there is no budget that doesn't do it. And the fact is that at the end of it all, much more depends on the monsoon and the state governments. The idea that the central government controls rural India or agriculture is a vastly... So this is a rhetorical thing.
Sure.
So I think the central government needs to focus really on corporate tax, income tax, infrastructure. I mean, these are the areas where the center is relevant. Irrigation and so on, whatever you may do, ultimately it's the state governments that are implementing that. Definitely the emphasis on fiscal prudence and on making the tax administration much easier. These, I think, are two important emphases in this. I wouldn't emphasize, on the infrastructure spending again. Again and again we find Prabhu promised so much spending on the railways, he was unable to spend it. So, let's not take the budget too seriously on some of those spending things. But I said the tax administration reforms, I think, are extremely positive. Sticking to the fiscal target is extremely positive. The idea of, are we definitely going to be moving in phases to cash transfers away from physical subsidies? Actual kind of roadmap being put out along with the Aadhaar law, which is probably required, otherwise the courts may intervene and say you can't do the DBT until you amend that. So, a number of things, there is a sense of a direction. There is a sense that apart from individual speeches, we are getting a follow-through. All of this may be called pervasive, aggressive incrementalism.
Right.
That's fine if you can keep this up. The one thing which to my mind was too incremental was this reduction in the corporate tax. If you're trying to get it down to 25% 2 budgets from now, what we have done this year is too little.
Swami, I'm just going to interrupt you because I've got some breaking news, which is that long-term capital gains tax has been unchanged for listed securities. So we've got that clarification from the government. That was one issue that was causing nervousness, but we've got that clarified. Long-term capital gains tax has been unchanged. Probably that's one of the reasons why market recovered as well. That's a big relief there. Dr. Maram, you want to comment on that first? Sanjay as well?
Yes, of course. I think this discussion was on even before the budget was speech was heard, that this is going to destabilize the market, and we had this discussion even yesterday. So I think this really gives a lot of comfort to the market that there is at least some predictability going forward.
But Niku, do you want to get reaction from our market panelists as well? Long-term capital gains tax stays where it is. There has been no tweaking on that, so they're not increased it from 1 to 2 years. You want to get quick reactions from our market panelists?
And I think that's a breaking news, sir. Sandeep, that explains why we've seen an intraday recovery of more than 2.5%, both for the Bank Nifty.
Huge relief, Rashesh, aren't you relieved?
Absolutely. I think the 3.5% sticking to the responsible fiscal target and the no long-term capital gains are the two big reliefs for the markets. I also think we have all been speaking about the government bank recapitalization of 25,000 crores. I do believe it's not all that bad, because not capitalizing them too heavily, too early on has also put the onus on the banks to recover assets, to restructure them, to eke out as much as they can out of the NPAs. And I think even that is a good thing.
Okay, Prashant Jain, there was beautiful recovery coming in the markets, and I just quickly want to get you in before we go across to Prashant Jain as well. The 3 hits from the budget this time?
I think just two, because this, the market had gone into this budget expecting the fiscal deficit not to be at 3.5 and to be higher. And two is that the long-term capital gains would get taxed. Both have not happened. Fiscal prudence is the mantra of this budget, and no taxes on listed equities. I think that's fantastic.
Okay, Prashant Jain, you may want to come in on this one. When we walked into trade this morning, there were two fears. Looks like both those fears have not come true. Do you think now that the event risk is behind us, after the recent underperformance Indian markets have reported in the month of Feb, it's time to equalize now?
I think Indian markets are poised extremely well, in my opinion. I think the economy is poised very well. The budget has maintained the consistency of giving more emphasis to investments over consumption. And I think this will lead to sustainably lower fiscal deficit, lower interest rates. So I think, net, I feel all interest rate sensitive should do quite well going forward. And the valuations also in that space are quite attractive.
Well, gentlemen, stay with us, and this doesn't get bigger than this. A big network exclusive. And Sandeep, I guess for both ET Now and Times Now, this is really the big moment.
Network exchange